All right, happy Friday. Anthony Special here with Special Analysis. Hope you had a fantastic week and you are geared up for the weekend. Guys, if you enjoy these videos, if you like them, if you find them informational and useful, please below, like, share, subscribe. I would greatly appreciate it. I do all of this for free simply because this is what I was looking for as I was, becoming a trader. And it was a very lonely, uncomfortable journey for me, and I really am trying to take that pain and suffering away from others who are trying to accomplish the same things that I had set out to do for myself. So today we're going to talk a little bit about setting a stop, utilizing a strategy of a weekly settlement. So sometimes a weekly bar is just too big to use to set a conservative stop. So we're going to break that down real quick, and that's what today's topic is going to be. So I'm going to open up the chart. We're going to take a look at the S&P 500. These are the futures contracts. So this is the ES futures contract. And what you're looking at here is a weekly chart. So you can see at the close of last week, we had a breakout. Price had very aggressively accelerated through our resistance channel. So we confirmed that we had a 1% breakout. So we just measure from here, measure to the close of the bar. We had approximately a 1.87% settlement. So that, to me, means the market is going higher from here. Now, I can't set my stop all the way down here because it's just a little bit too big, knowing that my first target's probably going to be here, my second is going to be there. So I want to be a little more conservative than taking that much of a risk, especially on a leveraged futures contract. So let me break this down. So what I'm going to do is I'm going to go from a weekly chart to simply a daily chart. And this way I can really hone in on and kind of identify an area where support became resistance or where resistance became support. Because that is the area where I want to place my stop. So here is the confirmation. This is Friday's candle. This is, again, our roughly 87% confirmation that the market is likely going to go higher. I'm going to want to take a good chunk of my position off here, probably get my stop to break even. Hope to get my second chunk or third or whatever off higher. Even if you took a third mid channel here and a third here, whatever your technique is, whatever your plan is, that's up to you. But I now can dial in on finding a low risk area to place my stop. So I'm going to go back to where where resistance, this orange line, became support. And that transpired right here. So on this candle, it acted as resistance. On this candle, it acted as support. So this is where the hands changed. This is where the imbalance occurred. So for me, I'm going to want to place my stop just right underneath the wick of this candle. So the low of this candle is 43.20 quarter. Maybe you put it at 4300, 4310, 4315, whatever. 4320 if you want to butt it right up to the bottom. That again is up to you, depending how much space you want to leave it. But now we can go back and say, look at this. Now we're taking a 3% risk as opposed to a 5.5% risk. We've dialed it in so that we know right where resistance became support. That's what I need to know. I need to know, where did the market change hands? When did the buyers become in control as opposed to the sellers? That's where if price drops below, the likeliness is this trade is considered what's called a failed breakout, and it would then likely roll over from there. But if that doesn't happen, then this was a safe spot to put our conservative stop. And then again, we have a target 1 and a target 2. If you wanted to take a piece off in between the two targets because they're fairly wide, I would not be opposed to that as well. But that was kind of the lesson for today. I thought we'd finish up the week on that because identifying stops and low risk, to me, is super important. When it comes to trading, you want to live to trade another day. And I learned that as a young trader, as a very novice trader, that listen, you're not always going to buy the top. You're not always going to buy the bottom. You're not always going to sell the top. You just want to get the chunk in the middle. You want to be conservative. You want to take only trades that have confirmation, and then you want to just take your money off and be in cash. So we want to get in, we want to make a good living, and we want to get out. We want to wait for that next opportunity to set up. We'll get in, make a good living, get out. And if you do that just a few times a year, you can be wildly successful. You don't have to have a ton of exposure, and you don't have to trade every little nook and cranny of the market. You can just look for these great setups. But this is how I would dial it in from a weekly chart to a daily. This is how I would identify where my stop would go, and of course where my targets are. So with that, I will leave you to enjoy your weekend. I appreciate you, all of you. Again, if you like these videos, please feel free to like, share, and subscribe to the YouTube channel. It's greatly appreciated. You can find me on all your favorite social media outlets, AnthonySpecial.com, and of course you can visit myself and my colleagues at any time at TradersAgency.com. So with that, again, I wish you a blessed and beautiful weekend. Enjoy yourselves, enjoy your family, relax, and we'll reconvene next week. Thank you again.